All right. Hey there, everybody. Good afternoon, good morning, good evening, depending on where you're at. Hey, Mirza, good to see you. Hope you guys are having a good trading day so far. As always, we can talk about SPX, but really, this time in this session is a great place to ask any questions that y'all might have around the market. Uh, is it echoey for anyone else? Let me know. I think it's coming through the bright mic. Yeah, it is. So, hey, Chris, Lorna, Mike, great to see y'all. Mike sounds good. Okay. If you have me over on Twitch or YouTube right now, that might be part of the reason why it's a little echoey if you have double broadcast going on. Hey, Omar, good to see you. Corey, same to you. Hello. So like I was mentioning, this is a really great place to ask whatever questions you have around trading, whether it's an individual symbol, right? A setup, a trade idea, whatever you guys have at all, let me know. Okay, I'll maybe if Lorna, one of you guys can maybe restart sharing on your end, that might help out. And W Day, Mike, absolutely. We can take a look at that. But let's get started with SPX, the market today, and then we will go from there. Mears, I just saw your message. Yeah, I was trying to blast out all the alerts that I send out for this session, so it took me a second, but I am here. So, starting with SPX this morning, we actually had a really good pullback setup on the hourly chart to look for re-entry. So for those of you in the small account mentorship, right, we took this setup. Now, I was a little cautious, right? Some of these intraday plays that I've been doing recently have gotten to like break even or a small profit, but then they end up stalling or reversing. And so I was being a little bit more mindful of that. And let's kind of talk about that setup here right now. So for the pullback entry, it was a perfect one on the hourly chart. Any of you guys who took the small account boot camp class that we did recently, myself, John Carter, and Cody, if you signed up for the elite package, you also got access to a pre-recorded class that I did about strategies and chart setups that I specifically look at for growing small accounts. And this was one of the setups that was taught in that pre-recorded class, just a simple pullback entry. Now, this, of course, is on a bearish trend here for the hourly chart, but you can see, right, when we zoom out a little bit more here, that the hourly chart started to go into a bearish trend. The 10 and the 30 crossed below the 100, and now we're in a stack down formation. We have momentum trading below the zero line. We've had some bearish signals here on the compound breakout tool, which of course have been canceled out by pullback signals. But every time we have pulled back into the 30 recently, on this time frame, it has made for a good re-entry, right? A pullback entry to then try and play for a rollover to the downside. And the nice thing about taking a trade right off of resistance or vice versa, right off support, is your stop's right there, right? The idea behind this chart setup is you're jumping in this case, right at resistance. But let's say instead we tried to hold 4500 and break above it to turn it back into support. The daily chart, of course, is still more bullish. So that was definitely something to be mindful of when we jumped into risk on this part of this trade, right? Keep the risk a bit smaller. But if we did start to break above this level, which you can see my alert was at 4502. And the reason why I had it set slightly above 4500 is one, at the time, the 30 period simple was like 4501. But the second reason why is sometimes around those big levels, you'll kind of break a little bit above them, but not hold it in any way, shape, or form. And the reason why that can happen when you see a slight break, but then it reverses is basically it's a way of the market makers. And I'm not saying it's the market makers specifically, guys, right? But you guys get the idea. It's basically a way for them to clean up. So people have stopped right at 4,500, some people above that level. And so it's a way for them to take out all those stops before they do in fact reverse back to the downside. And so that's why I had the alert at 4502. If we really start to break above that, that for me was going to be my place to protect capital and modify our cover order at that point for our profit recycle trade. But it did a really good job of maintaining below 4,500. You can see on the 10-minute chart, we were trading right around those moving averages of the 100 period simple and the 10 period simple. On the 5-minute chart, we were kind of in consolidation in that range as well. But like I said, it was a beautiful, I would argue, like a textbook entry for a pullback move on the hourly chart. Now, of course, it could have broken to the upside. But like I said, our stop is so close to our entry point that we had a good chance of still protecting at least a portion of our capital, depending on how quickly it could have broken to the upside, and then, manage the trade that way. Otherwise, though, we have a nice amount of room to play back to the downside. Now, for myself, like I mentioned at the start of the session, I was a little cautious about trying to be a bit greedy on this trade. I feel like the last few intraday trades I've done, they've gotten, like I said, to that break even cover order to a small profit, and then it ends up reversing back to the opposite way. And so I didn't want to see that happen again. And so when I saw that we were at break even and we were right at the 10-minute support level here of the ATR trailing stop, and we are still right above the 100 period simple on the 5-minute chart, I was like, "Oh, okay, let's go ahead, lock this in." I still thought it looked good for dumping to the downside, which is what ended up happening. But we've seen, one too many times where those levels end up holding and, it ends up hurting us in the long run. So that's why I took the break even fill, right? But you can see not much later it broke. You likely, if you missed the modified order cover alert, then the original cover order definitely should have filled on you because we've stair stepped lower overall. We are right back at price support levels that we saw yesterday. Um, but overall, I still think this looks weak. We can see momentum has crossed below the zero line on the 5 and 10-minute chart. So that adds to that bearish weight. On the hourly chart, we're starting to get that pullback in momentum here, right? So that could allow for another leg lower. Certainly plenty of room to play to the downside on momentum. We have a bearish signal popping up once again on the compound breakout tool. We have an hourly squeeze setting up. The only thing I'm not a fan of right now on this chart is the Bollinger Bands. The Bollinger Bands are still relatively flat, even though the price is starting to put a bit of pressure right to the downside. And so that to me means be a little cautious of this price level. Doesn't mean we can't break it. I was talking about this in the chat in the small account mentorship earlier this morning, but the intraday time frames, of course, especially the smaller you get, they're easier to change, right? They're easier to see cycles flip around on you. And so if we keep putting pressure here, then likely these will start to flare open and we can trend lower. But that's the little bit of caution I have at this range right now. I would not mind jumping back into a bearish entry if it makes sense, but I would like a pullback entry now on the 5 or 10-minute chart, very similar to what we got here. So if we can either consolidate or maybe get a bit more of a bounce back into these intraday resistance levels and it looks like they're holding, if everything overall still looks bearish, then that could give us a re-entry to do another profit recycle trade on the intraday setup to stair step lower. But I'm a little hesitant to do anything right at this level. One, because we're not near resistance, and two, we're at very not, I guess, quite at, but we're close to the lows that we had yesterday where we stalled and then had that strong reversal back to the upside into the close of market. And part of that reason is because on the daily chart, we are right at daily support. So on the daily chart here, we have the ATR trailing stop at 4466.97. Notice how that's right near the lows of yesterday. That's where we had that strong bounce start to occur to the upside. And so could be a possibility to end up seeing that again overall. So something to be mindful of there in case that happens. And GE, absolutely, we'll add that to the list too. So we can take a look at that. If we do start to break the daily ATR trailing stop as support, especially if it looks like we're breaking that into the close, then we could be setting up for a stronger pullback on the daily chart, which of course we know is a possibility. It's been part of the reason why I've been a little cautious. Like, technically, this would be a good pullback setup for a bullish trade idea. But the reason I didn't necessarily take it yesterday, we looked at it, kind of debated about taking it in the small account mentorship. But the reason I didn't do it is because we still have this weight of the weekly exhaustion, right? And hey, Marco, good to see you. Yeah, CCL, we'll add that to the list as well. So we'll pop this up here. So here on the weekly chart, and we're just now starting to get a red bar for the week. Um, we'll see how this goes into the close. This may or may not cancel out of the bullish signal. We of course have weekly support at 44.47. So if we do start to break the daily support, if this looks like it's going to roll over, right around 450 might be a good next target for an intraday move to the downside, not only because of the psychological level, but because of the weekly support. And then, of course, if we start to break weekly support, that's once again a better sign that momentum's starting to reset off exhaustion levels. And of course, when momentum resets, typically one of two things happens. We either consolidate and we'll start to be in chop, which, if that's the case, we'll look to see if the support level holds or where we find support. And then we can start playing the range, right? The levels to the up and down side, kind of like what we had back here when we consolidated for a bit. You play from one side to the upside. Once you hit the upside, if it's holding, if you're a bit more aggressive, you play it back down. And then you keep playing it that way until it breaks one way or the other. Like in this case, it broke whenever we did decide to go back into a more trending move. So that could be the first option here. The second one, though, is we actually get the underlying price to pull back with the momentum, right? That's the other side of that coin and narrative. And so if we really do start to break the 10, right, especially if this bullish signal also cancels out, that's a better sign that we could be, continuing to head lower, which in that case means we might want to cancel out or cut back on opening too many bullish trades to the upside in the account. And we might want to even it out a bit more with some bearish trade ideas as well, which for those of you in the small account mentorship know that I've been trying to get a short list together of both bullish and bearish trade ideas to consider in case we do end up getting that break, or vice versa if we hold and this is actually a good pullback entry to then play the bounce. It's a little too early for me to say that just yet. Certainly the intraday charts are leaning towards that weakness right now. But we'll, continue to trade it day by day, hour by hour, and see how that narrative works out there. So that's kind of my analysis on SPX right now for what I'm seeing. I wouldn't mind jumping into a new intraday setup if it makes sense. So we'll see if it presents another opportunity. If not, I'm not going to force it. We have a nice bonus trade on for the close today for those of you in the small account mentorship. Technically speaking, if you don't have any pattern day trading rule that affects you, right? If your account's over 25,000, you could always look to close the profit recycle trade and take the bonus profit wherever it lies later in the day, or if you want to take it now, you can certainly. For myself, because I do trade a smaller account where I am limited on my day trades, I am going to let that cash settle. So it will be a bonus trade into the close. We'll see if we can get around our pin strike for today. And we'll take a look at that in the last hour of market in the small account mentorship room. So, that being said, you guys have a few symbols that you want to look at. So, let's go ahead and pull those up and see if we need to take any sort of action. An MSTR art? Absolutely. And Netflix, certainly, guys. See, the list is piling up here. We should be able to get to those today, though. So, starting with W Day, bit of a pullback here. Um, still overall a bullish trend. Momentum's in the process of resetting. So you can see as this was resetting, the price chopped. Now we're starting to break support. So we might get a stronger pullback into the ATR trailing stop. There is quite a bit of price support within that range. So that wouldn't be out of the question. I would say the good thing for the bulls right now is one, we do have a recent true low signal, which may help out. It depends on if we're at weekly exhaustion. The second thing, though, is the Bollinger Bands, at least currently, right? This could change. But currently, they're not anticipating a move lower. Now, Mike, if you're short W day, I would say great job jumping onto this break. My target to the downside is as long as it doesn't bounce back up into the close and try and hold the 30, that is. If it looks like this more into the close, my target would be right around this 220 level, right? That would probably be it. The ATR trailing stop is technically at 219 and 32 cents. You can see this price support has been around 218-ish range. So 220 to me makes sense for a pretty good target. That way, if we get close, but don't necessarily exactly tag that level, good place to take those profits. Otherwise, if you're trying to be a bit more bullish on this, I would say if you're in something, you might have already cut the trade here when it broke the 30, and then you could re-engage down here if it holds support and looks like it's going to maintain. I'm actually kind of in a similar situation right now with MVDA where we're in a trade on MVDA for the $500 challenge. It's based off the daily and weekly chart, which technically are still holding up. But man, on the intraday charts, did it fall down today? And part of the reason it fell down is because SMCI had horrible earnings, or I actually don't know what their earnings were, but the market reaction to their earnings announcement was horrible. Last I checked, they were down 20% from where they were trading at the day prior. So huge gap to the downside. And that unfortunately is weighing on MVDA. The good news for it is similar to W Day, the daily and weekly chart pattern still holding up, right? But it becomes a question now of do we start to protect capital and then look to re-engage, or do we, stay and sit through the pullback? So for W Day, for example, if you haven't already cut the trade, what I would be asking myself is how much time do I have on this trade, right? Is it out a couple weeks where I can sit through a day or two of a pullback and a bounce, kind of like what happened here? Or is it a this week expiration? If it's a this week expiration and your target is, back up in this range, might be a bit harder to get to that if we don't get a solid bounce into the close, right? And buyers step back in. So in that case, I'd probably look to protect capital. If it's out a few weeks, then you might watch to see if this support holds. And if it breaks that, that to me would start to really cancel out of any bullish trade idea. I'd protect capital at that point if there's capital to protect, and then wait to see if there's a way to re-engage into the trade. And of course, if you're really aggressive, if it starts to break that, momentum's cross, Bollinger Bands are opening lower, you could flip the trade idea and continue to play short like Mike is doing and try and play it down towards the 100 as the next target. Yeah, down 24.6%. Let me just show you guys this chart. I mean, SMCI is whoever had put on this yesterday, depending on their strike level, right, is very happy this morning. But it gapped bigly to the downside. As soon as we pull this up here. And yeah, there it is, right? Nice, strong, bullish trend, beautiful move higher. And then, oof, whatever they did or said around earnings, the market did not want to hear it. It opened at the 30, immediately rejected that as support, and then just fell down. Notice how it broke the ATR. Notice the Bollinger Bands are flaring open. So this is what I mean. If W Day starts to look like this, obviously, maybe not as dramatic, but if this is how it looks like when it's starting to break, cut the bullish trade idea, right? No way I'd be jumping into that. But yeah, big move to the downside. And unfortunately, that's hurting our MBD. So I've I've been watching that this morning for those of you in the $500 challenge, and depending on how it looks today into the close, may end up cutting it to protect capital there. So, and then of course, if it finds the support it wants to hold, just like mentioned on W Day, we could always look to re-engage back into it. So let's pull GE here. That was next one that you guys wanted to look at. So GE, overall bullish trend to the upside, looking, pretty stellar since the end of last year. I mean, this has just been a great run higher. We'll check out the weekly chart in a second because we could be starting to see weekly exhaustion levels, which might mean once again we either start to chop or we could start to see a stronger pullback. Currently, it looks like we're consolidating, right? The trend is still bullish. So ultimately, I'd still be more bullish than bearish on this setup right now. But you can see here we had some top hats. We hit some exhaustion to where that's pulling back. Bollinger Bands are flattening out. The price to kind of chop in this range. The compound breakout tool showing a consolidating signal. And then we're building into a squeeze, which isn't uncommon during consolidation. So if the trend can maintain holding up and we start to get some bullish signals again, then that might be a clue to start playing the trend back to the upside and play the squeeze to fire to the upside, kind of like what happened here, right? We had a true low signal that started to print. We started to get a bullish signal on the compound breakout tool. Momentum started to build up off the zero line. And then you had the trend move going up into the earnings announcement. Let's take a look at the weekly, though, because the weekly is sometimes that clue to where if it's at exhaustion, a daily squeeze that's setting up could actually be a counter trend squeeze and fire to the downside. And in turn, it allows the weekly momentum, which is at potential exhaustion levels, to reset. And ooh, unfortunately, we are, right? So notice how we hit the top of the axis back here, very similar to what happened here. And then what happened? Well, back here, momentum reset and the price pulled back a little bit, but it basically consolidated, right? And then once the momentum started to cross below the zero line, is when we actually had the stronger pullback that year. So once again, beautiful run up. We started to hit exhaustion levels. And what's actually happening is momentum's very slowly, but it has started to pull back. But the price has actually continued higher. And we've talked about this a couple of times recently. When this happens, the way I look at this is I imagine a rubber band that is between the underlying price and the momentum. Now, usually that rubber band stays pretty regular, right? It's not like taut. It's not like stretched out, if you will, right? Because usually the momentum moves with the price. So you can see here we moved higher, momentum moved higher, right? That rubber band stays the same. But when you start to get this divergence where momentum is resetting and the price continues higher, you can basically imagine that rubber band is being stretched. And I'm sure all of us in school at some point have played with a rubber band, or for the females in the room, right? We've played with a hair tie, or maybe the men with longer hair, right? I won't judge. You've played with hair ties, and then all of a sudden it snaps, right? It pops and it either shoots in one direction or it shoots in the other. And the same thing can happen here as the rubber band stretches out. Usually one of two things happens. Either one, the momentum bars end up picking back up and it causes another run to the upside in this case because it's bullish, right? So it causes another run to the upside in the price, or the price breaks down and then it matches back up with momentum that's been pulling back. So it's a little too early to say what that is. Obviously, momentum is like very slowly pulling back, so it has a lot of room to go. At the same time, though, I will mention the weekly chart has done a great job of holding the 10. If we start to break below the 10, that's probably our clue that the price is going to pull back to match up with momentum once more. But if we get and I would argue a bit more of a reset, I guess it doesn't need to happen, but I'd be looking for a bit more of a reset. And if that happens and we start to see green bars pick back up again, right, especially if it's off the zero line, then that's your clue that GE will likely keep going. and then you re-engage to the upside, and that daily squeeze will likely fire to the upside. So I would be very cautious about how much higher I'd want to play GE, at least as of right now. You have a pullback signal in the compound breakout tool. It's still only Wednesday, and so we have, basically half the week left, but it is attempting a bearish divergent bar. Now, of course, that's a counter trend signal, but a bearish divergent bar with exhaustion could be the catalyst to where we start to break and move lower. So that would make me a little mindful. So I don't know if there's any, new trade idea I'd want to place here. It'd probably be one on my watch list to keep an eye out for. And if we do pull back closer to this 110, 109 range and it holds, then I might consider engaging just for a short move to play back up into like 115 for a quick scalp, right? Back up into the recent highs. Especially if the daily chart wants to try and maintain this bullish pattern. But of course, if it starts to break, like I said, that might end up being a counter trend squeeze move on the daily chart. And anything long, you might want to start, protecting profits, protecting capital on. And then, of course, you could look to be a little bit more aggressive and taking a bearish trade idea to play for a stronger pullback to the downside. And on the daily chart, arguably it would be right around where that weekly support is not too far away from the ATR trailing stop here. So you might wait for confirmation of that to break. And if it does, play it down towards the 100 for the next side. But that's what I'm seeing on GE right now. Let's go on to CCL. And Corey, don't think a hedge might be a bad idea, but for myself, I want to wait closer into market close before considering a hedge, though. And the reason why is I want to see if what happened yesterday and the market happens today, meaning we basically still end up holding that daily support of the ATR trailing stop. We don't get too much of a break in this range. Now, I will agree, hourly chart is starting to look good to roll over, but let's confirm whether or not that roll happens, or if the roll happens, let's see if it's short-lived like it was yesterday and we bounce back up. If we bounce back up and we're still holding that ATR trailing stop, it makes me cautious to put on a bearish hedge here because we're basically right at support levels. And it's the place where if you put on a hedge and we hold support and bounce, that's not, you're basically putting a hedge on at the lows, right? So if we were trading higher and we had room to play down into this level, then yeah, I probably wouldn't mind a hedge. But at this point, what I want to see is basically either a bounce back up again and then we can look at a potential hedge, or I see the support on the daily chart start to break, which might mean we're a little late, but at least we get confirmation that things are breaking, and then we can look to place a hedge for that next stair step down, if you will. So that's why I personally haven't put on a hedge just yet, but it is definitely something that's in the back of my mind that I'm looking at right now. So CCL, so here's this one. Once again, does have some recent true lows. The last time we had true lows, beautiful run to the upside. The question, of course, is similar situation to what we've talked about. Are we at weekly exhaustion or not? So we'll take a look at that. We had daily exhaustion levels that pulled back. The price pulled back a little bit and then consolidated. So that's usually a better sign for bulls. The fact that it didn't completely give it up as it reset is, a good sign that if we start to roll back up, right, we'll go into that next leg of the bullish trend. Still, though, the 10 and 30 are converged. The underlying price is trading below those levels. Bollinger Bands are flat. Momentum, you can't even see the bars from yesterday or today. This zoomed in. That's definitely a sign of consolidation. It looks like based off of the number over here, right, that tells you how high or low the bar is. When it gets to be a negative number, like it is for yesterday and today, it does mean it's technically crossed below the zero line. So that actually adds a little bit of bearish weight. Now, once again, usually when you zoom in like this, when you can't even see where the bars are at, even if it crosses above or below the zero line, I usually weight it more as consolidation than anything else. If we zoom back out and then actually start to see red bars appear to the downside, kind of like they did here, then I'll put a little bit more bearish weight on it. But currently, I would say this is still more consolidation. And that matches up with the compound breakout tool, makes sense with the squeeze printing, like I said, the Bollinger Bands being flat. So all of that is still fitting that narrative. And then let's look at the weekly. Sorry, guys, I'm opening a LaCroix. So the weekly chart here, actually, few things. One, it definitely was trending below the 100. And I know we've talked about this in here before. I know I've mentioned it recently, but for anyone who is new, anytime that you trend below the 100 like this and you're in a bearish trend, you always wanna be mindful when the price eventually, right, hopefully, right, if it's a good symbol, it gets the bounce back up to test the 100. Because sometimes what happens is it's basically a trap for the bulls, and that's what we wanna be mindful of here. Now, I love how this broke, especially on earnings. This was a pretty strong break to the upside. And now, though, we're consolidating into support. So the real test here right now, because we are close to weekly exhaustion levels, the real test will be, can we maintain holding the 10 as support? Even if we're just consolidating, can that hold up? If it can, that's a better sign for the bulls that will try and keep going in this trend. Otherwise, as you can see from the past, right, Carnival has been in a bearish trend for a while on the weekly chart. And notice the last time we had a retest of the 100, it attempted to break it and then it failed. And then it retested, failed, retested, failed. And usually, right on those retests, when it can't really get a strong break and get that bullish sentiment going like it did recently, right, or at least attempted to, usually that's a place for bears to re-engage, play it back to the downside. And so that's what I'd be a little bit mindful of. I like that it's holding up, but there's personally no new trade idea I would take here. I'd continue to watch this 10 period simple, see how momentum tries to reset some. If it's resetting and the price maintains holding this range, then I would, take into consideration those daily true lows, give myself a bit of time because Carnival's no stranger to chopping. So definitely go out like maybe a couple months, but then try and play for the bounce to the upside. Or because it's so inexpensive, arguably you could look at going and buying the shares because the shares, of course, won't have any worry about theta decay with the expiration, and then it's easier, of course, to hold on to shares longer and chop and then play for the upside, especially if you did something like 100 shares. Then you have the opportunity to do things like covered calls, and take a income. I think Carnival has weekly expiration. So take like a weekly income, if you will, while you're waiting for that bullish sentiment to pick back up once more. But for myself, not much I'd really want to take on this one personally. It's in a bit of a tricky spot, so it'd be one that I'd continue to watch at this point. MSTR is up next. There we go. So MSTR, nice recent run to the upside. Well done for anyone who caught that. Got a little bit of consolidation into earnings. Earnings disappointed, so we dropped down off that news. Started to break the ATR trailing stop. Did get a bounce up, but we're bouncing right into the 10 and 30 acting as resistance with a potential bearish divergent bar today. Bollinger Bands, I wouldn't say they're flaring open, but they're definitely pointed to the downside, so that adds some weight. We have momentum crossing below the zero line, so that's a bit bearish. Um, if we get the green box today, that's going to technically cancel out of the pullback signal, go back into a more consolidating signal. We do have some true lows, but with the Bollinger Bands still open to the downside, I would wait for them to flatten out before I tried to re-engage into a discount buy for the long, kind of like it did back here flat. You're also at a technical support level, so that always adds benefit to it. And then if you gave yourself time, you could have played for this nice run higher. Um, and so with the Bollinger Band still opening lower when the true low starts to print, that's a clue that it might be a discount price, but it might not be the best discount price. So let's, always aim for the best discount price, in my opinion. Let's go to that weekly chart. So weekly chart's actually very similar to what we saw in CCL. Maybe not as long of a bearish trend, but it has been in a bearish trend recently, trending below the 100 period simple. And we're getting our first real test of the 100 to try and break above it. Now, we had a solid bounce here, but on the recent pullback, we're already back down to test that range. So this is the true battle point. We need this level to hold, right? Ideally, get a follow through maybe on these bullish divergent bars and then play for a bounce back up. Instead, the bullish divergent bars don't follow through and we start to break. That's a place maybe to start re-engaging from the bearish perspective to play back to the downside. Now, your first targets might just be the support levels that we have here. But certainly if we start to break these support levels, makes for a better clue that we could roll over, maybe go back down and test the lows around 150, if not trend lower overall. From a momentum perspective, we technically have plenty of room to the upside. Um, but we also have room for this to, start to roll back over. Here, the bullish signal that we had canceled out, and because we're not in a stacked up formation, that means it goes back into a consolidating signal at this point. Um, so if I were to really put on a trade here, one, I'd probably wait until Friday to confirm that we're trying to make a bullish divergent bar for this week. And I would treat this a bit more like a lotto trade, especially because we don't know if the market's going to get a solid bounce or if it's going to start to break. If the market starts to break, it has me hard to believe that this is going to hold up well. But let's say the market holds up. Let's say this holds up and we start to bounce. This bullish divergent bar over here has a high of 452.46. So that might be a fun place to put on kind of a lotto trade. And what you could look to do, because technically with the 3 bar rule, this higher high should follow through by next week, right? That's the idea behind it. So you could go out to next week's expiration. Technically, if it's within your risk tolerance, you could just look to jump into like a long out of the money call. So if this is within your normal risk tolerance, you could do like the 425. If we get back up to 452, you're 27 points in the money on the spread. And obviously, that compared to a $5 cost basis is a pretty nice risk versus reward. If this is outside your risk tolerance, I totally get it. You could always reduce your capital, right? Do something like a 5 point spread, 425, 430. It's only 65 cents, right? 435 max profit potential, not a bad risk versus reward. And then if you can work your way up to 452, you wouldn't even need to move all the way up to 452. You just need it to move into your short strike. And if that happens, right, excellent risk versus reward. You could also consider a 10 point spread. It's $1.17 at this level. If you really wanted to, you could do a broken wing butterfly, and that's 77 cents. But you guys get the idea. Basically looking at a bullish trade at or below 450. So that way, if it followed through within the next week, it's a pretty nice bonus trade to have out there. Let's see. The high of this bar currently is 396. So the other way to go about this is if this bar prints as a bullish divergent bar into the close, you could give yourself 3 bars off of this current bar that's printing, right? So that would be 1, 2, 3. So September 1st. And then you could do something closer to at the money, right? 395, $400, 40 cost basis. That's actually not bad. If at the very least we follow through with the higher high on this week's bar. And keep in mind that's based off where the high currently is. That high might change if we continue to bounce into the end of the week. But based off the current level, right? Well, that's bounced around, but it's around a $2 cost basis, $3 profit potential. So obviously, if we hit or go above that range, you'll be right at or in the money, should allow for a profit. Obviously, if it bounced higher into that 450 range again, you should definitely have a profit. You could kind of do half and half. So you could do a thing of you go out of the money with the spread, right? So you're still trying to play off the follow through on this one, but you also give yourself a little bit more time to try and have that bounce work itself out. So, few different ways you could play that, but like I said, I would be just a little bit mindful of the capital, and you might wait until Friday to put that on just to make sure that the signal's still valid into the end of this week. And let's just double check the weekly chart follow through rate on bullish divergent bars. 83%, so not too bad. Not the best, not the worst for the weekly chart follow through. Well, another way to play this, of course, is if you're waiting to confirm a bullish divergent bar prints, what you might also look for on the daily chart is Bollinger Bands flattening out. If the Bollinger Bands can flatten out, right, maybe we start to get some more bullish pickup in either momentum or a bullish signal down here on the compound breakout tool. That might give you a little bit more conviction to then try and take that lotto trade. Otherwise, you know, treat it just like that, a lotto. Keep your risks on the smaller side, I would argue. Netflix is up next. There we go. So on Netflix here, overall consolidation, the 10 is in between the 30 and the 100. The Bollinger Bands are flat. I mean, this is really flat. If you forced me to put a trade idea on this currently, I would probably be leaning towards some sort of iron condor, iron fly. And actually, I think somebody asked me about this yesterday into the close in the small account mentorship. I'm not sure if you're in here currently, but if you are, this is exactly why I mentioned I wouldn't put on a bullish trade yesterday, because yesterday I got asked about basically putting on a bullish trade with the idea we'd go back up and test resistance. I don't think the levels looked bad, and I mentioned that. But the bearish divergent bar, the fact that we're kind of at this price level and we're not getting a good break of it, all of that is a clue that we could move back down tomorrow within this chop. And we did. We followed through that lower low. And now you can see, of course, we're right at price support. Now, this could stair step down, right? If we get a bounce back up into the close and form a bullish divergent bar like we did here, back to back divergent bars are a better sign of chop. Um, but otherwise, that would be my slight caution is if we're closing below the 10 and it's a stronger red bar, just be mindful. It might, especially if the market tries to break its support level, you might see it break a little bit there. Otherwise, though, everything else about this is consolidation. The momentum's in consolidation. Basically, it's hugging that zero line. You have a consolidating signal in the compound breakout tool. So, and Zen, if you have an iron condor on it, I'm not sure where your strikes are, but if it's a credit iron condor, meaning you hold two credit spreads, I think that looks solid right now. Currently, I would say be a little cautious of maybe the put credit spread side of it, right? Depending on where your strikes are, that's the side I'd be a little bit mindful of based on what the chart currently looks like. But outside of that, you know, I think that's a good way to go about Netflix currently for this week because it's not really moving either direction. Let's take a look at the 4-hour chart really quickly. So 435, 445 on the puts. Okay, so you're getting a little bit of heat on the puts then, if that's the case. The good news for you is at least we are holding the 100 period simple. Now, once again, it's a bearish divergent bar, right? So that could be the catalyst for us starting to break this level. But you do have momentum trying to cross above the zero line, still very much hugging it, right? That's more consolidation with a slight bullish sentiment with the cross above. This is definitely consolidation. Bollinger Bands are consolidation. Moving averages are consolidation. So ideally, you continue to hold this level. If you do, then you still might find yourself in a good spot. If we're starting to break this level, though, then you might look to protect capital on that put side, is what I'd look for myself. But doesn't look bad. And of course, if you have a profit, don't hesitate to take it, certainly. And that is kind of the end of our list for today, guys, that you guys wanted me to look at. Does anybody have any questions about what we talked about? Or maybe another symbol that you want to take a look at real quickly? Let me know. And we can pull it up really quick for those of you in SPX. Finally getting a little bit of a bounce here. So it basically is trying to hold that level. Potential bullish divergent bar, but arguably watch to see how this 5 and 10-minute charts, 10 period simple holds. If this starts to hold, this could actually be an entry to play back to the downside. Now, my caution here and what I would say is if you take this as an entry to play for reversal lower, your target might just be the lows of the day, which is about 6 points away. So you might be looking at this as a quick scalp. Um, but this was kind of the pullback entry I was initially looking for here. Once again, the slight hesitation I have about this re-entry, though, is right off of that daily support. I see you guys have a list come in. Okay, we'll try and take a look at all of those if we can here. But really quickly, for those of you looking to maybe re-engage on the short side for SPX, this is once again just the thing to be mindful of is we're still right at the ATR trailing stop as support on the daily, which should pop up here any second. There it goes. So that's the slight caution, but it does look like it's attempting to break, so we'll see if it can. Let's see, Baba. Let me pull that one up. Yeah, I'll try and go through all of these quickly, guys. I can't promise we'll get to everything. If Bob, if you're asking about MVDA, I did talk about that earlier. For myself, I'm in a trade on that, and basically, if it starts to break the 4-hour and daily support levels, I'll probably cut it. Otherwise, it's kind of like SPX right now, where the intraday doesn't look too hot, but the daily support is still holding up very nicely. So it's not it's kind of in that question point on is it going to hold or is it going to break? And if it breaks, then we need to protect capital. If it's going to hold, then we don't want to cut the trade right at support for a bullish trade. So for Baba here, Baba has earnings coming up on the 10th before market. Now, personally, I don't plan to play Baba earnings. If I were, so I wouldn't be doing anything into the announcement. You can see right now it's consolidating into the news. You have back-to-back divergent bars. Bollinger Bands are flat. Momentum's resetting. So all of this isn't uncommon going into an earnings announcement. The question is, what will the reaction be? Is it going to be more of a non-event or do we get a bigger move? Here off of this earnings, I would argue it's a bit of a non-event. Ultimately, we trended lower, but the first, kind of initial reaction around the announcement was very narrow ranges, not much happened there. An initial drop off here. Is it before market? Yeah, it's before market. Okay, so initial drop off and then it kind of chopped. Here off this earnings, we actually had a gap up and then it pulled back into that range and moved a bit lower. This earnings actually opened a bit lower and then bounced and then reset. So it almost seems like on a lot of these, you have a little bit of volatility that comes off the move. But for the most part, it doesn't seem to have as much of a reaction to it. So if I were to trade this through the earnings announcement, which I do not plan to, but if you forced my hand, this might actually be one where I play more of the idea where it's gonna be a non-event, right? Basically where it's priced in. Now, I will point out a lot of symbols that I've seen this earnings quarter have had more of the volatile moves around it, right? So keep that in mind if you're playing this for a more non-directional move. I feel like that hasn't been the case for a lot of these names, at least the ones I've been looking at. Um, but if I were to take this, this is probably the trade idea I'd look at. It's basically a $5.41 anticipated range. We're trading right by 95. 95 has a bit of open interest to it, so that's why I chose that strike. And then you go up 5 points to the upside, that's 100. 5 points to the downside is 90. Notice how 100's a nice psychological level right by the recent highs. 90's right by our price support down here of the ATR trailing stop and the 100 period simple as a technical support. So nice range to give it. And the idea is we'll stay within the anticipated theta decay will get wiped out of this trade after the announcement. So currently it's around a 385, 390 credit. That's around $1.15, $1.10 risk, depending on, how many contracts you go in for. So not a bad risk versus reward. And given how it moves, right, even when it's had those volatile moves, it's not uncommon for it to come back down and meet the price range that it was in prior. So that's probably how I'd lean towards playing that if I wanted to. But like I said, I don't know if I really want to on Baba, given that a lot more have seen volatile moves. AMD, let's pull up that one. Of course, Sharon. So on AMD here, this one we've already had earnings. Now, arguably similar situation to Baba. It had some volatility the day of the announcement, but ultimately we stayed within the same range. So an iron fly, once again, might have been the better trade idea to hold through the news, given how that moved. And so that's what the idea is around Baba is a similar reaction to what we see here. Now that we're past earnings, though, we're basically right back down at price support level. You can see that this has been a price support around 109, 110-ish range since back here. The 100 period simple is getting closer to the underlying price. So if we can meet that and the underlying price holds it as support, might create a good buy-in opportunity to play for a bounce. You do have some recent true lows during this consolidation. You have a great squeeze setting up. Currently, the lower indicators, this one's a pullback signal, so that's a clue that we could go down and test the 100 if we break this price support. Momentum's very flat, hugging the zero line. It's technically above it, so that adds to the bullish sentiment. But once again, I would call this more consolidation than anything else. On the weekly chart, let's see where momentum's at. Given how much this has been chopping, I would imagine that we're not at exhaustion levels, or if we were, we're starting to reset off of them. And yeah, so we're not at the top of the axis, but we are resetting. You have a consolidating signal in the compound breakout tool. Once again, this is another symbol where we trended below the 100, attempted to break it. This was definitely a strong break, right? That's kind of what you want to see. I'm not a fan that we broke below the 10 period simple, but even here you can see this has definitely been a range of price support. So if we start to break that, then I'd play down towards $100 as the next target. That's where the 100 period simple and the 10 period simple are on the weekly chart. It's a psychological level. And usually if you try and break above the 100 after being in a bearish trend and it breaks the 10, right? And that break of the 10 happens quickly, it's not uncommon for it to go back down and test the 100. The only reason why I wouldn't necessarily engage in that just yet is because very clearly we have a price support level here. So I'd want confirmation we're breaking price support. And then if that's the case, play it down to 100. Otherwise, this might actually be once again a buying opportunity to try and play for the bounce. And we do have a valid bullish divergent bar from last week at 119 that you could try and play for a follow through on. But that's what I'd be watching on AMD. So if it can hold that 100 on the daily chart, might be a place to re-engage. And then Brian, you took an overnight volatility crush trade on AMD, selling an iron condor, made 63% at the open. Well done. Probably not my setup. I don't. I mean, I'm more than happy to talk about iron condors, but I didn't alert it. So might have been Danielle's, but well done. Yeah, if it was through earnings, I can't remember if I talked about AMD through earnings, but usually it's one of those two. I'll either through an earnings trade, like a lotto trade like that, we'll either look at an iron condor, an iron fly, if you will, or we'll look at a volatile trade to play both up or down depending on the move. And I think AMD is similar to BABA, where it doesn't necessarily get the volatile move as often as other symbols do. So but I know Danielle's also been playing Iron Condors and stuff through earnings recently, so that might have been hers. But very happy you took the one. Well done. So CF here, here once again, trending below the 100, recently broke above it, is doing a good job of trying to hang on to that 10 period simple. Do have a recent true low that printed yesterday. Excellent follow through on that bullish divergent bar. So if you took that immediate entry, well done. Momentum's still in the process of resetting, though. This is still consolidating. Bollinger Bands are still flat. So I don't know if I'd look at this for like a stronger bull trend entry just yet. If you do, I'd say give yourself time based off the true low so that way you can sit through a bit more chop before it happens. Very nice, Sin. That doesn't sound like a bad way to do it either. And then here's the difficulty on this one. So CF is right at the 100 period simple as a weekly resistance. And of course, it wasn't a very long bearish trend, but the moving averages did turn into a bearish trend. So once again, you want to be mindful about how the price acts here. If we can start to break above it, then yeah, good sign to maybe jump into the long side. But if it holds here, don't be surprised if at the very least we go back down and test support, if not maybe get a rollover. So it's trying to turn bullish. Certainly the lower indicators are helping out. The Bollinger Bands opening to the upside are helping, but very difficult spot for me personally to try and get long when I know we're still right at technically slightly below that 100. And back-to-back divergent bars, which is what it's attempting to print here, can be a sign of overall consolidation. So you might be sitting on that for a second. And then MVDA. And then Corey, all of our sessions are recorded. So Abby usually does a pretty good job of getting these posted quickly if you want to rewatch it. For MVDA here, pulled back right into the ATR trailing stop. Now it's attempting to hold. So this is exactly what I was telling you guys about, right? With SMCI, it's gap down over well over 20%. Last time we checked it at the start of the session, it was down 24% for the day off of its earnings. So horrible reaction. And of course, MBDA being a similar company has been affected by that. And that's why we're getting this stronger pullback here. Now, we do still have a valid bullish divergent bar for this week. So that might help us get back up to 450 by the end of the week. And then, of course, we have a bullish divergent bar on the weekly chart, which is what I'm playing this trade idea off of, back at 473.95. So that still has into next week to try and get the follow through. So for myself, from a technical standpoint, the daily chart's holding up. The weekly chart's holding up, which means I don't want to cut the trade here, right? That would be potentially cutting it at the lows. At the same time, I would still want to be very mindful of my capital risk, which is why I have an alert set here at 420. If we start to break below 420, it means we're breaking the 4-hour 100 period simple moving average as support, and we're breaking our daily support. And if we're breaking both of those support levels, I probably don't want to be in this trade. And part of the reason why I want to be mindful of this is because even though the weekly chart, and we talked about this on the entry of the trade, the weekly chart has an excellent follow through rate on bullish divergent bars. It's only failed twice on not following through with a higher high within the 3-bar rule, right? That's an excellent follow through rate. It's like 95% or something like that. Excellent follow through rate. The downside, and the reason why this might be the third bar that doesn't get the follow through, is because we're at exhaustion. So exhaustion is really, something that you want to be mindful of when still trying to play bullish trades, in this case, bullish exhaustion, right? Vice versa, if you're at bearish exhaustion and you're still trying to be bearish, you need to be cautious at that point with capital. And so thankfully we, kept our risk in line with risk tolerance and everything else. But this is the one thing that could kind of weigh us down to where we can't get the bounce and follow through. That's why if we really start to break below this level, I'm out of the trade, right? And we can always look to re-engage if it makes sense, but that's kind of my line in the sand at this point. So the intraday charts, like I said, look pretty ugly, but that daily chart still trying to hold up. We're right around weekly support. So if by the end of the week we can hold weekly support, that will look good for us too. And we'll see if we can't still get a bounce and reversal in our favor. So that, that's the question. And that was once again something that came up earlier in the chat and the small account mentorship was like right, somebody, I think it was they mentioned that, oh, this is stair stepping down, we're making lower highs, lower lows, like should we be out of this trade? And it all really depends on the time frame, right? What was your initial entry and what time frame were you looking at for this trade idea? And also, how much time do you have on the trade in general? For us, we still have a couple weeks on the trade, and it's based off the daily and weekly chart, and that is still valid, right? That's still holding up the overall bullish trend. We just are having to sit through a bit more of a pullback than we would like. So if it starts to break, then obviously it's breaking the technicals that we want to see hold, and that's our clue to cut it. But the intraday charts, those can shift, just like we see here, right? This moved lower at the start and then reversed right back up into the close. Here, we certainly moved lower today, and now we're attempting to bounce some. So let's see if we get that reversal back up into the close again. Those intraday charts are a lot easier to shift around than a daily and weekly chart. So we'll see if this can hold up. And then last but not least, I know we're going a little over time. I don't think anyone's after me though. And if you are, I do apologize. But let's get to this last symbol you guys asked about, and then we'll stop after this one. So RBLX was the last one you guys asked for. Oh, and then Phoenix Traders, hello to you. Welcome aboard. And then certainly if you want to reach out, the best place to do so is either here in the chat, or you can email me at allison@simplertrading.com. And I'm more than happy to talk to you on there. So just let me know. And then I'll type in that email in the chat really quickly. There you go. So last but not least with RBLX, ooh, ugly move lower. So it is actually close to a 20% move. So similar to SMCI, obviously not the same point range because we're not trading as high, right? We're at $30 when this happened, but strong gap to the downside, still room on momentum. It doesn't look like it's made a third deviation Bollinger Band snap, surprisingly. And what I mean by that is when the price exceeds the third deviation Bollinger Band, there's a good possibility that the price will either stay within that range or actually continue in that direction. So in this case, if we break the third deviation Bollinger Band, especially with there still being room on momentum, there's a good probability the price will either stay within this range or continue lower. Now, for myself, I'm not going to play a game of FOMO and feel the need to jump into a short here because I've clearly a chunk of this move. But if you are already in something to the short side and you're debating about taking profits, you might leave a runner on, especially if you have multiple contracts, because there's a good chance it will either stay within this range or continue lower. So, I mean, that's a pretty ugly move. The 30 starting to roll over below the 100, so stack down formation. See if we're running into weekly support or not. And we are. So we are right at the ATR trailing stop as support. So that's the caution. If we hold this, right, then any bearish trade I'd be taking profits on. If we start to break it, especially once again with room for momentum to move lower, the bearish signal here, the squeeze, then you could look to play the squeeze to the downside, maybe play back into 25. That's a psychological level and the lows that we had back here. So that'd be kind of a next target. But it is right at a weekly support level, so that I'd be a little bit mindful of that. But for myself, no new trade idea I'd put on for this one currently. And that is my time today, guys. So thank you so much for joining me. As always, may the trade be with you, my fellow Jedis. And I look forward to talking to y'all next time. For those of you over on Twitch and YouTube, I will certainly send out any updates that we do to the $500 challenge account. But otherwise, I'll be back on the mic here on Monday, more than likely, for the Monday market update. And then otherwise, for you guys over at Simpler Essentials, I'll be back on next Wednesday. So y'all have a good one, y'all. Bye.